News Radio 700 WLW.
And Rock, yeah, I mean, it only goes to follow that people of my age, boomers, if you will, are gradually transitioning out of the workplace and out of the business place and selling their business.
So right now, 41% of all U.S. businesses are owned by baby boomers, okay? 34 small to mid-sized businesses, okay? 34 million small to mid-sized businesses in the U.S., 12 million small to mid-sized enterprises that are owned by boomers. So as these folks are now getting in their mid-60s, early 70s and are retiring and wanting to kind of hang it up, what happens to these businesses? What happens to the wealth that they have created and that they still have? Do they get passed on? Do they go defunct? And where does this leave us moving forward?
Well, let's talk to a fellow who can help us out with that. It's Scott Bushkie. We've had him on before with us. Great guest, a business strategist, CEO of Cornerstone Business Service, also an author. Finish strong, sell your business on your terms. Scott, welcome back to the program.
Thank you. Good to be back.
So, Scott, you heard what Rocky was saying there, this so-called silver tsunami. How big of a generational thing is this? Is it just, us always wanting to talk about something, or is it a real thing?
Yeah, it seems like we've been talking about it in the M&A community for a lot of years, but it feels like it's starting to hit now. We all know the numbers of baby boomers and how they've have changed the trends as they've gotten, through the different generations. And now they're at an age where, like you said, the youngest is, I think, 61, and the oldest is 79 right now, and they're in the retirement age, and they're going, hey, they got to exit or get out somehow, whether it's, selling the business, transitioning to their kids or their employees or an ESOP or something. But, unfortunately, too many of them just don't know what to do, and they're sitting there, kind of stuck in the day-to-day and not sure exactly how to get out.
And the easy thing to do, or easiest, would be, look, you pass it on to your son or your daughter, and they take it over. But from what I read, some of the kids don't want to be involved in that business. They want to do something different. They want to do something else, so that leaves them in a kind of a precarious spot, right?
Absolutely. Somewhere along the line, people have determined that greater value is due to longevity of being in business. And what we've seen in the studies that we've conducted ourselves have shown that, if you want to ruin generational wealth within your family, just pass it on to the next generation, the next generation, the next generation. Because by, the numbers are, that 30% will make it to the second, 14 will make it to the third, and only 3% make it to the fourth. So, the saying of, short sleeves in 3 generations. That is exactly what will happen. And so what we're seeing, on the M&A side of things with the clients that we're working with that are typically with 5 million, 150 million revenue, is that we're helping them, get full value for their company now and allowing them to choose who their successor is, because there's so many buyers in the marketplace and records amount of money is that they're selling now, getting great value, getting to choose who their successor is, and then working with their son or daughter and saying, okay, what are you interested in? Where are your passions? Where are your skill sets? And then helping them start their journey in business if that's what they want to do. But just because mom and dad is, wired to be an entrepreneur does not mean son or daughter is, especially in the same, boring industries that don't have a lot of technology brought into them or whatever else it might be.
Scott, is this a buying opportunity for an aspiring younger business person?
I think it's a great time to be a seller and a gre't time to be a buyer.
Okay.
It just depends on what size. There's so many deals going on right now. I would say for the low end of market deals, it's really a great time to be a seller because there's so much money. There's so more private equities in the marketplace than there ever has been, and trying to find anybody trying to find employees these days, it's so tough. So people are. You can either grow organically as a company or you can grow through acquisition, and more companies are growing through acquisition, than they are organically than they have in the past, just because it's hard to grow organically right now. But then if you look at small companies, where the vast majority of companies are sub $1 million or $2 million in revenue, more what we call Main Street related companies, those buyers are typically individuals that are, have the entrepreneurial itch or want to get out of corporate America, and there are a lot of opportunities there with the SBA right now and their loan programs and different things you can do, and just so many boomers getting out. So there's a bigger array of opportunities to take a look at. So yeah, I do think that on the Main Street side, the small side, it's a great opportunity to get in and buy your own business and control your own destiny. And in the larger deals, there's so much money out there. Like last year, we averaged in 2024, we averaged 10 offers per client. Just to give you an idea of how much money is chasing good quality deal flow out there.
So Scott, what advice would you give to folks listening right now that may have a business and they want to retire, they want to travel, they want to go see their grandkids more and that sort of thing, but you want to hand over this thing that's been your life's work and you still care about it, and by the way, you also don't want to pay an exorbitant amount of taxes when you go to sell it.
Right.
What advice do you have for the folks that want to offload this business?
Yeah, I would say first it just starts with a conversation. Give an M&A advisor a call. Give your trusted advisor a call. Give us a call. We're happy to talk with folks, and just learn what your options are. We just did a national study of 750 business owners around the U.S. with at least $5 million or more in revenue, and over 40% didn't even know all their exit options. And so it's just learning. Take the time to learn, because like you guys have said, you get one chance to do this and do this right, and most people don't know what their options are or how they could even get out. And the other I would say is get a valuation. Like we do fair market analysis. Someone that's reputable in the M&A world, sit down with them and say, what's going on in my industry? What do you think my company's worth? Because again, our national study showed that over 60% have not had any kind of a fair market analysis or any kind of valuation done. Yet it's their largest asset. So that's a good place to start. Is build your team around you. What's your value? What are my options? And then you can start making better informed decisions and going with it. Talking about the tax. I've seen people pay full boat in tax, and they left hundreds of thousands, if not millions of dollars on the table because they didn't bring the right tax people in up front along with their financial advisor.
Scott Bushkie is our guest, and Scott, let me ask you, in your opinion, from what and your experience, do people tend to overvalue what they can get out of their business or undervalue it? Because I'm speaking from experience, just based on we sold our house last year, and I was ready to undervalue the hell out of it, just because for one thing I wanted to move, but for another I was like, but then you get full market price for the thing. But you also don't want to go in there and go, hey, that house is worth $5 million.
Right. Yeah. Most times, you've seen both out there, but most times they overvalue it than undervalue it, at least initially, because, again, to your point, you mentioned that this is their life's work. This is, and what we learned in our survey is that 76% of those business owners founded or started the company. They birthed this company. It's their DNA. It's part of them. And another 16% inherited from the family. So they've got all this passion and excitement and pride into this thing. And they see this as their kid is their baby's the smartest, the best looking, and the best athlete in school. And unfortunately, everybody thinks that, and it's not always the case. So there's usually a dose of reality to get them into what the market is. But, that's where, again, I've seen other people go, we just had a client we sold last year that they tried selling for $3 million. We're almost going to shut it down. Their trusted advisor brought us in. We ended up selling the thing for $8.25 million. And they were just going to shut it down and walk away from it. So it does vary, but more times than not, it's that emotion that this is their baby and my baby's the best kid around, and they put a price tag on it accordingly. That's usually overvalued.
All right. Well, Scott, thank you so much. Always a pleasure. Scott Bushkie, people want to find out more about you. Where can they go?
Yeah, go to Cornerstone and -business.com or give us a call at 920-436-9890. And again, we're happy to have just a no obligation free call and just help you learn more about what your options are and see how we can help you.
All right. Thanks so much.
Awesome.
Thank you.